Hello, is bridge financing right for you or for your clients? So how does a bridge loan really work? That's what I wanted to share today. I've got a few different options here, um, and let me just walk you through it, just step by step. So I'm going to go ahead and share my screen so you can see this. As we look at bridge financing, the way that the bridge loan works is that we are that out of the way there for you. So let's say that we have a client that their house is worth $650,000 and they want to do a bridge loan. First of all, the interest rate on the bridge loan is considerably higher than what the going market rate is. And it requires a refinance of the current mortgage to be able to pull that equity out of the current house. So on this scenario, we did a bridge loan and we did it at 75% loan to value on the property. So there's 25% equity still left in the property for $487,000. Now here, again, the interest rate is 9.25%. The payment is $46.10. When we look at the actual payment breakdown, the principal and interest payment is $4,010. Now on that principal and interest breakdown, the principal and interest, there's no payments on the principal and interest for the first year. So that is a major benefit to the bridge loan. You do have to pay the property taxes and the homeowner's insurance on a monthly basis, but the principal and interest would not be due on a monthly basis. Again, I did say that the taxes and insurance you would pay on a monthly, you can pay those yearly, however you want to do those. That would be your responsibility, but the interest rate is going to be roughly 9.25%. Now, in the new home, we take the money that we created, which was $176,000. We take that and move it on over into the new property, which requires $169,000. Now, with that $169,000, we're looking at a $750,000 purchase price. We put the 20% down. We go up to 75% loan to value on the current house, 25% equity left. On the new house, we can do 20% down and an 80% loan to value. That interest rate is going to be more favorable at around 7.375. That interest rate is about 0.75% higher than what the going interest rate is today. Right now, we're about 6.5 in that ballpark, 6.625. So now your principal and interest payment would be $49.44. As we break that out, property taxes, I'm guesstimating at $700 a month. Homeowners insurance at $100 a month. Principal and interest at $41.44. And then we'd be looking at a future refinance when interest rates are more favorable, around 5.25, 5.5. That's going to drop the payment from the $4,900 down to $4,100. So the benefit to a bridge loan is that it helps you to be able to bridge that gap between your current house where you have the equity and then the new house. The downside is that it creates two sets of closing costs and actually three sets of closing costs because you're going to have to refinance that in the future. Benefit, again, is that there's no principal and interest payment due on the bridge loan on the actual current house that you have. On the new house, there would be taxes and insurance. But the reality is, again, you've got two sets of closing costs here. So it becomes a very costly scenario to run a bridge loan, in my opinion. Now, we do have another path to go that is much, much less expensive, which is the path that we have been going with most of our clients who look at a bridge loan or want to know a bridge loan. So if you'd like to know that path, please reach out to me and we'll go over that path for your individual clients, or if you are a client, we'd be happy to map out a scenario for you as well. All right, thanks. Have a great day. Bye-bye.